is Ascend Digital Solutions, an award-winning digital transformation company that is reimagining digital for Africa. Ascend is accelerating progress in Africa's underserved regions and bridging the digital divide by charting a powerful digital roadmap underpinning economic growth, blending strong, innovative capabilities with financial and technology expertise, enhancing existing digital infrastructure to accelerate digital prosperity, and promoting diverse programs that drive localized and meaningful connectivity on the continent. We are rapidly becoming a representative of Africa's true digital sovereignty. Our rural wireless network program is providing data and voice services to 3.4 million citizens in rural Ghana. We are offering neutral, shared, digital platforms, mobile applications, and security services that empower MNOs and government enterprises. Our joint venture, Digital Infrastructure Ventures, is enabling the delivery of our e-transformation solutions through high-speed wireless broadband, 4G, 5G services steered by a super information highway with 100 gigabits per second backbone, secure SD-WAN solutions that accelerate time to market, and express connectivity of 50 to 100 megabits per second connecting metropolitan and district assemblies, post offices, hospitals, and the police service. Ascend Digital Solutions is setting up high-capacity, seamless, and secure nationwide broadband infrastructure that will drive entrepreneurship and a high-skilled economy. We are creating tremendous opportunities in next-generation technologies, which will enable the delivery of robotics, autonomous driving, artificial intelligence, and machine learning. Ascend's digital infrastructure subsidiary, Smart Infraco, is a technical partner of the National Information Technology Agency under the Ministry of Communications and Digitalization, Ghana. We are redefining the state of digital play in Ghana by bringing seamless connectivity to Ghana's public institutions and agencies, helping MNOs and ISPs deliver advanced data and voice services by leveraging the Government of Ghana's world-class digital infrastructure backbone. Tier 3 data center with secondary backup, disaster recovery, and low latency. Over 1,000 kilometers of fiber optic cabling along the eastern corridor of Ghana. The largest government-built WAN infrastructure supported by Metro Fiber and nationwide 4G LTE TDD 2.6 GHz FWA, providing high-speed broadband connectivity, managed IT infrastructure services, cloud and cybersecurity solutions. Ascend Digital Solutions and Smart Infraco are enabling next-generation technologies in Africa, with Ghana as the digital playground. We are building a booming African economy and closing in on the vision of holistic digital empowerment. Join us as we unlock the full potential of digital technologies and transform Africa into the world's largest digital economy.
From connectivity and cloud, Africa's digital future is being built today. From connectivity and cloud to data centers, cybersecurity, and artificial intelligence, the infrastructure beneath our digital economy will shape the decade ahead. How do we build a digital backbone that is resilient, inclusive, and future-ready? Welcome to Building Africa's Digital Backbone, Infrastructure for the Next Decade, presented by Ascend Digital Solutions Ltd. Let's build what comes next.
Good morning, ladies and gentlemen, and welcome to today's webinar. Today, we are talking about Africa's digital infrastructure. Africa currently is entering a decisive decade of digital transformation, and across the continent, governments, enterprises, and citizens are becoming increasingly dependent on digital platforms. However, the success of Africa is dependent on strong infrastructure, resilient infrastructure, and affordability. This means that we require strong broadband networks, fiber connectivity, data centers, cloud infrastructure, cybersecurity frameworks, etc. It's only by doing this that Africa can compete globally, unlock innovation, expand financial inclusion, and create new economic opportunities. Today, we're going to look at building Africa's digital backbone infrastructure for the next decade. And to help us with that, we have three panelists joining us today, all of whom have had some experience within the telecom sector and have moved on to other sectors within the financial sector. Our first panelist was recently the Chief Commercial Officer of Royal Group of Companies based in Cambodia. A couple of weeks ago, he was appointed as the CEO of CAM GSM and also CEO of the Digital Communications and Technology Division of the Royal Group of Companies in Cambodia. He has over 30 years experience across the telco sector, technology, finance, and he's passionate about consolidating all the learning that he's had over the years to drive financial inclusion in developing markets across Africa, Asia, and globally. First panelist is Mr. Manu Rajan. Welcome, Manu.
Thank you, Thomas. My pleasure to be here. Thanks for
Great.
having me.
Thanks. Our second panelist is also from a telecom background. He is currently working with Smart Africa. He has over 20 years experience in strategic ICT telecommunication sectors in Africa. Currently, he serves as the advisor for programs and skill-up initiatives at Smart Africa Secretariat based in Rwanda. Our second panelist is Mr. Osman Issa. Welcome, Osman. Third panelist has over 14 years experience leading digital transformation and enterprise technology strategy across banking, technology, and telecommunications sectors. Having worked with the likes of Vodafone, Busy, Absa, and Stanbic, he's currently the CIO at Ascend Digital. Our third panelist is Mr. David Brickman. Welcome, David. So today, as we go delve into the discussion on building Africa's digital backbone, we have our audience joining us from all parts of the globe, Africa, Asia, Europe, etc. And at the end of the session, our panelists will have a chance to ask you questions. So for those of you joining us on LinkedIn and YouTube, please use the comment section, drop your questions, and our panelists will answer it at the end of the session. And we hope to have a very interactive session too. Gentlemen, good morning and welcome to today's discussion. So we're on a journey here in Africa. We are looking at Africa's digital transformation, and we know that the fundamentals require strong infrastructure, resilient infrastructure. It requires a lot of trust. And to do that, it requires some significant amount of investment and coordinated effort across the various sectors of the economy, and possibly both private-public partnerships to help accelerate this across Africa. So to kickstart this, I would like to start with Osman. So I know Smart Africa has been at the forefront of several initiatives across the continent, including the One Africa Network and the Smart Africa Broadband Strategy. So Osman, from your perspective, what are the three most critical infrastructure priorities for Africa for us to address to be able to partake in this whole digital revolution that we're experiencing? So things have lost this one. Okay, well, we'll come back to Osman. You're probably having some technical issues, which is one of the things that we need to fix as a continent to move forward. But then, David, I mean, you're here, you've been in telco, you moved to the banking sector, and you're currently a CIO of one of the leading financial institutions in the country, in Ghana, and Africa. But then, from your perspective, how important is resilient digital infrastructure in the future of banking and financial sectors?
Thanks so much. So, I mean, how important is infrastructure and banking? So, banking in itself is a utility, right? Similar to other utilities, your electricity, water. If you really think about it, access to financial services is that critical. And Yeah, I was doing some research. I've never actually looked this up, but just generally, what's the availability of something like electricity, right? In a city like Accra, and impressively, it was somewhere between 85 to 95%, right? And at the base level, these utilities being electricity, being water, building up from a layered approach all the way to financial services, right? You see that infrastructure is no longer an operational, support function. It's no longer something that is a sort of privilege, at least in the core or the major capitals in most African countries, right? It's essential to core businesses. So downtime directly impacts commerce. It directly impacts, payroll, getting your salary at the end of the month. It impacts people's livelihoods, paying hospital fees or hospital bills, paying your children's school fees. So it's essential. It's essentially a utility in itself now, right? So then underlying infrastructure is that important. So that's what I'll say to support financial inclusion, etc.
Thank you, David. So I think the key takeout from this is in terms of your banking now is more of a utility now, just like you have your water, electricity, etc. And then the as a utility, the infrastructure that supports that is no longer sort of a support function is basically the fundamental, the basics that needed for to drive financial business across the continent in the country. So we'll come back to you, David. I mean, Osman, we lost you for a moment, and we actually just wanted. I mean, David was talking about how the um, data infrastructure is essential and now the fundamental for the banking sector. It's no more the usual support system that we thought of years ago. It's now the fundamental basics that we need it to be up available always. But then from your end, you have worked with Smart Africa and all the initiatives that you Smart Africa has been championed on the continent. What are the three most critical construction priorities for Africa to be able to accelerate our digital transformation?
Yeah, thank you very much, Thomas. And just to be clear, if my technology is not failing me this time, you can hear me loud and clear. And good morning to the audience. Certainly, digital infrastructure is really relevant for us to be able to support the digital transformation agenda. If you look at what is happening within the continent, a lot has happened. And for me, if we are going to look at the next decade, I think that the top three that I will look out for will be the backbone redundancy. Number two will be regulatory harmonization. And number three will be interoperable data or compute infrastructure. Let me give a bit details about it. Now, if you look at Africa, for example, currently we have some, when it comes to the physical backbone redundancy, we have some choke points, and which means that we need to be very careful and build towards a real resilience. So if you look at Egypt's Red Sea Mediterranean corridor, you have a number of subsea cables choking at that point. And if you look at the numbers, we have close to about 17% of the global internet traffic passing through that area. So what it means is that if there's any regional conflict or any disaster and there's a cut there, a number of cables will be affected. Now, closer to this is what we have around Cote d'Ivoire. You remember in March 2024, there was that disaster and a number of countries were cut off. So we have Cote d'Ivoire, we have Ghana, Liberia, and a number of countries, particularly in Africa, West Africa, were affected. So there's also another choke point there. And then you have landlocked countries that is even worse. So which means that for the landlocked countries, they will really have to depend on the other countries that are closer to the sea or coastal countries to be able to access data or internet or connected to www global wide web. But of course, what it means is that we really have to now move towards building some resilience and redundancy. Now, thankfully, there's been some kind of work that is ongoing because if you look at the Sahara Fiber Broadband Corridor linking Algeria, Niger, Chad, and Nigeria is under construction. So more or less to ensure that at least we can have alternative routes. Apart from that, we also have some West Africa countries that are really coming together and also some operators. You realize that there is a link or terrestrial route that is currently built Lagos to Dakar. So it's also more or less providing an alternative route. And of course, if you look at the links like the Nairobi Kampala upgrade, is also an alternate. So the first thing is for us to ensure that at least we have the physical backbone redundancy and to build resilience so that whatever happened in 2024 March, that a lot of West African countries certainly will not happen again. Even if it happens, we will have alternatives. And you remember that time, a lot of the banks and service providers could not really work. The second thing that I really want us to look at is regulatory harmonization, because we are now at a stage where a number of countries are really putting in a lot of investment. Stakeholders are putting in investment. But when it comes to scaling up, it becomes a challenge because some of the infrastructure is such that it can serve more than one or two countries, perhaps within the region. But then you have investors, and for that matter, the private sector putting in a lot of investment. But then when they want to scale from one country to another, then it becomes a bigger challenge because at the end of the day, more or less moving and going through the same processes that you had when you first had your first deployment. So the second one is actually regulatory harmonization. And the third one that I will really look at will be the compute and data infrastructure. And here is not the physical one, but we are looking at the interoperable rails underneath, right? So for example, you can have the required digital infrastructure, you can have the required redundancy put in place. And again, you can have the required digital harmonization, regulatory harmonization done. But then you want to send money from Ghana to, say, Nairobi, the rails, sometimes they don't interoperate. So which means that we have to ensure that the services really interoperate. And a typical example is PAPS. If you take PAPS within the banking sector, PAPS has been in operation, but of course, currently it connects only about 19 countries out of the 54, because you still have some countries that are really required to come on board. So like I mentioned, I think that these are the three areas that I think that we should really be looking at within the next decade, because we have done the investment already. If we want to add, we really have to optimize what we already have, and then we can build on top of it. Thank you very much. And back to you, Thomas.
Thank you, Osman. So the three areas, priority areas are backbone redundancy, regulatory harmonization, and interoperable infrastructure. And it's good to know that we are taking lessons from what happened in 2024 when we had the subsea cable cut in Cote d'Ivoire. As you mentioned, the Trans-Sahara fiber infrastructure that's being built, and then the coastal one from Lagos to Senegal, Kampala, and Nairobi. So at least Africa has been moving forward. We are taking lessons, and we are fixing the basics to make sure that we don't have the same issues recurring. But also one thing that was clear from both what you said and what David said is, for us to move forward and look at the next decade, we need to make sure that the infrastructure is always available. Because now it's no longer what we thought was somewhere in the background dreams. It's part of our everyday life. So now that brings me to money, because we are talking about from Osman and David talking about infrastructure, looking at the traditional system. But then a lot of your work, Manu, you focus on underserved communities and driving financial inclusion. So from your end, how does all this data infrastructure influence financial inclusion in the reserve communities that you're working in?
Thanks, Thomas. First of all, good morning to everybody. It's good evening here in Cambodia. Um, I must say, as um, someone who has picked up the best practices from Africa and has tried to implement that in Southeast Asia and turned that into case study, I've been a beneficiary of uh, the big revolution that happened in telecom. If you look back, you will notice that by 2007, uh, the almost 47% of the world had developing world had mobile penetration. So that means the mobile network operators did a great job in putting digital device in the hands of the people, and the fintech companies therefore then leveraged on top of that. Um, we uh, we at Royal Group of Companies, we have a company called Wing, which emulated the success of M-Pesa uh, in Kenya. So in 2009, when Wing ANZ Royal Bank wanted to start a mobile financial services company here, so they went to the National Bank in Cambodia and said, we want to start a mobile financial services company. So there was a delegation that was sent from here to Kenya to study how M-Pesa, Safaricom had rolled out M-Pesa. The team came back and suggested that this is how M-Pesa had started in 2007. And then at the time, they were saying they had reached about two-thirds of the households in Kenya by 2009. And this is how the success story had evolved, and we must start here. The National Bank didn't have, excuse me, the National Bank didn't have a regulation for mobile financial services at that point in time. So instead of saying no to a very alien concept, the National Bank of Cambodia, excuse me, the National Bank of Cambodia said, let's start it as a pilot project. So Wing was started as a pilot project in Cambodia in 2009. And over a period of time, it actually grew to accommodate more than 100% of the country's GDP as transaction volume. So it became a much bigger success, contextually put, than the company from where it actually got inspiration to start the business. So uh, once the handsets were there, we learned that there were three things that were important. One is financial literacy. So there is a mobile device, which is a digital device in the hands of every Cambodian, which gave them a unique identity, which they could use to transfer money or include them into the formal economy. But then we realized that just financial literacy is not enough. You also need to have financial ability, so which is the self-confidence to do a transaction yourselves. So which is quite hard to come by. And if you look at Africa and even in Kenya or in Ghana, you look at any of the African countries, the same thing applies because going to an agent and doing a transaction, which is an assisted digital transaction model, is much more successful than encouraging a customer to do a financial transaction by themselves on their phones. The same thing applied here in Southeast Asia. So we started with agents, and the agents became so widespread based on the success of the business model that we cover 100% of Cambodia, with every district, every commune, every province, every street almost in some places covered with Wing agents who helped the Cambodian customers to do a digital transaction with the help from them. So it was, we call it an assisted digital transaction model. Then over a period of time, then we also realize that if you do not add use cases to them, then the rails that you are laying, the rails that the MNOs laid, and the digital device that is there in the hands of the people become useless if you do not have enough use cases for them to do. So sending money and receiving money is just one. And so from there, we ask this question ourselves, saying, what exactly is um, what exactly is this problem that a bank or a fintech company or a mobile financial services company solving. And then we realize that we are just fulfilling, we are a means to an end. We are just fulfilling a certain customer need. So then we did a little bit of backward forward integration. And then we said, if that's the case, let's also create the use cases within the ecosystem so that the finance then becomes an embedded part of a need satisfying journey. So then came Wing Agri, then came Wing Market, then came Wing Mall, then came Wing Shop, and so on and so forth, where each and every specific requirement to make a payment was fulfilled on the platform itself. And if you didn't have enough balance to make that payment or fulfill that transaction, then there is a loan that automatically gets triggered and then helps you meet that particular need that you're trying to fulfill. So from sending money, the whole purpose changed to fulfilling a need of a particular customer. But in the process, the learnings were three. One, the customer needs to know how to use the services provided to them. So financial literacy was important. Then the financial capability is important, the self-confidence to do a transaction. So the more number of steps that you provide to a customer to do a transaction, they will be more or they will be less confident to do it. So reduce that friction. So number of clicks required, number of screens required, you reduce that, more and more adoption will happen. Third was use cases. You try and create the use cases, forward and backward looking, and then you embed the finance within the needs satisfying journey. So that has been the success story of Wing. So that's the learnings that we have on how to drive financial inclusion in a country that at the time of starting Wing, the formal bank account, the financial inclusion was 9% of the adult population, of the population, and now it's more than 100% of the population.
Thank you, Manu. And I mean, it's good to hear that. Look, we need to pick lessons, and that's coming out strongly from what you said, what Osman has said as well. Because I mean, from your submission right now, you pick the lessons from what happened in Africa, specifically in Kenya with M-Pesa. And of course, picking the lessons, you sort of apply the local context to drive and implement that. But one of the last comments, which was also key, is because look, in this whole digital revolution, digital transformation, it's not just about the formal sector. We need to get the informal sector, which is part of what fintech is trying to drive, get the non-traditional guys on board to make sure everybody's being carried on this journey. And then, as I'm saying, the critical part here is that, look, if you want to get everybody on board, you need to make sure that it's simple and easy and more straightforward. You rightly said, when you add more steps, you so many clicks, etc., people lose interest. So then how do you get people along on this whole digital journey when there's so many things, so many hurdles, because they lose interest and they get left behind. So it's good to know that, look, we need to make sure that you make them simple, easier for those, especially in the non-traditional sectors, banking sectors, so that they can get on board and be part of all this digital revolution. And today, I mean, aside the infrastructure, we talk about a lot of things are centered on financial inclusion. So I want to go back to David here. I mean, back in the traditional sense, because of course you guys are building the traditional bank infrastructure, and all this is kind of linked to the non-traditional bank infrastructure to make sure drive financial inclusion. But looking at AI and cloud computing, how do you think digital banking can reshape the customer's experience? And bear in mind, Mana just mentioned the fact that, look, we need to make it easier, simpler, minimize the steps. And also from that aspect, what kind of structure capabilities do you think the financial institutions need to remain secure to be able to innovate and also to be competitive in the market over the next decade?
Okay, so I think overall, when you look at banking infrastructure, right, especially in Africa, to a large extent, um, obviously due to regulatory reasons, majority of banks run their core banking on premise, right? We're having conversations about running core banking on the cloud, to tap into advantages like scalability. And by scalability, I mean, when transaction volumes increase at certain periods of the day or the month or the year, how do the banking systems then scale to meet that load, right? To again make sure that we're meeting that uptime. Um, it's a conversation that's still going on in the industry. A few banks, sort of do a sort of hybrid cloud approach where you have the customer experience layer, so your front end, anything web, anything mobile authentication is on the cloud. So you notice that relatively when you log into most banking apps today, they are relatively faster. That's one approach that most banks are taking. You do notice as well that with banking systems, it is very likely that you work or you're a customer of a bank that you've experienced some kind of downtime in a month, right? So
Yeah.
there'll be a point in time where you're trying to make a transaction and then the transaction will fail. And there are a lot of dependencies that go into simply moving money from my account, David, to Thomas, your account, right? Um, you mentioned the formal sector, informal sector, heavy reliance on mobile money. I find it interesting that depending on the different parts of Africa you travel to, if you take Ghana for example, I doubt the average Ghanaian has their account number sort of memorized off the top of their head, but you notice that we know our mobile money, our mobile phone numbers, right, off the top of our heads. Whereas if you go to a Nigeria, even from restaurants to your Uber driver, anybody can just rattle their account number off the top of their head, right? So how do you, looking at the different diverse customer experiences within different African countries, how do you solve for that? Um, so the banks that, for example, are going to dominate in Ghana will get to a point where your mobile number is synonymous to your account number, right? Where you could just maybe call out your mobile number if you're requesting for a transaction, and that would hit your account number behind the scenes. So then, obviously, you asked about the buzzword now, which is AI. How are we integrating that into banking systems to deliver a better customer experience? I remember a few weeks ago, I traveled with my family and I was just making payments, and then it got to a point where I asked myself, could I simply, if I wanted to ask your standard, LLM like a GPT or ChatGPT, what is my transaction history or pattern for the past week or so? How would that churn out to give me a breakdown or a summary? That feature, for example, doesn't exist in any banking application in Ghana or in Africa today, right? I know it's something that we're working on. And then even with that, the question then becomes: do you want to feed, African or Ghanaian customer data into an LLM that is owned, overseas? So there's that regulatory conversation happening as well. So we're looking into a lot of research where people are looking to LLMs that's in a native language. I know a few companies, startups within the continent are working on that. It's something that is exciting that I'm personally looking into that space. But then looking forward as well, overall banking should be seamless, right? Every time I have one of these talks, the Bill Gates quote comes up where they say banking is necessary, but banking is necessary, but banks are not. In the sense that we bank every day, right? We manage money every day. We transfer money. We save money. Um, looking at the channels that we do it in. Again, Africa predominantly would be USSD in remote areas due to lack of accessibility of internet, etc. But whatever channel it is, it should get to a point where you could maybe pick up, I don't know, like if you wear a smartwatch, if you have a mobile application, a chat interface, and say, I want to send money to Manu, I want to send maybe 100 CDs, wherever he is in Africa, or Osman. I think Osman mentioned PAPs, right? So let's say I have a colleague in Kenya or in Nigeria, and I want to send 100 CDs to him. The interface being very seamless. So the conversion is done, and then it lands into my colleagues or my friends' accounts. So essentially gets into a borderless Africa, right? And that's where we're looking to solve for the next decade.
Okay, thank you, David. So looking at having a borderless Africa when it comes to financial transactions, it'll be great to see that, especially looking at your real-time banking, because that's one area that requires a lot of work. I think David being the sector, you understand what I'm saying. But it's also good to know that the banks are also implementing a hybrid system when it comes to um, data infrastructure using both the cloud and the physical service. I just want to chip in because even most Ghanaians are unaware that even in Ghana we have our own local cloud called the G Cloud. So when it comes to sensitive customer information, like David rightly said, when you're looking at using LLMs, a lot of LLMs access customer data, but then that infrastructure is sitting also in different jurisdiction. What the data, the rules governing that data, with that country. Whereas if you have a own local cloud here, you know that whatever rules are governing the data is based on the rules like set in the country. That gives more confidence to the citizens using it. But then also, Smart Africa, you're doing a lot of work in terms of you building a cloud for Africa, because you realize that for Africa to be not just a follower but a leader in this whole digital revolution, we need to actually create our own platforms, own our own platforms. And also, I like Bill Gates' quote: "Banking is necessary, but banks are not." So I mean, this way AI comes in, right, David? All right, David.
Exactly.
So thank you, David. And looking from there, Manuel, I just want to come back to you briefly. And when you look at the telecom sector, the fintech retail sector, what do you believe are the biggest opportunities for collaboration to build an inclusive digital ecosystem? And of course, you've been in all these sectors, so.
Yeah, thanks for that, Thomas. I'll pick it up from where David left. Right, David said the banking is necessary and banks are not, and that's exactly what the philosophy we applied here as well. We even gave it a name because in 2002 or so, if I remember, Lester Wonderman, who was known as father of direct marketing, had coined this term. He didn't coin the term, but he used the term affinity to say that products will turn into services in the days to come, and then that's how it eventually ended up with Uber and Airbnb and so on and so forth. So here we also asked ourselves that question, because after so many years of being successful as a mobile financial services company, and transacting over 120, 130% of the country's GDP value as transaction volume, the question arose, and we had about 85% market share, if I remember right. The question arose, though, what next? You have already hit the ceiling and you cover the whole country and the entire population, and then what are you going to do next? And the logical next step was to move into banking. So we upgraded the license from a mobile financial services company or payments company to a full-fledged commercial bank. Now, once you became a full-fledged commercial bank, the question was, there are enough banks in this country, so what kind of bank are you going to be? So then then came the discussion, is bank a necessity? So then we realized that banks are not needed, but what is needed is banking. And then we further translated that into need satisfaction. And we said people basically need to move money to cater to specific requirements. And then the requirements is what we said we will address. So that's why I said as an answer to the previous question, we actually brought in the ecosystem into the payment rails. And then we said, if you are looking at whatever it is that you are looking at, if I woke up in the morning and I'm looking for my morning coffee, you could actually go into your application and then just with 2-3 clicks place the order for a coffee and it comes home. And coffee, so we also added the last mile fulfillment of food delivery to it. So there is a delivery channel that was added to it. There is a physical retail shop. There is embedded finance and embedded loans, and there is embedded insurance. So the entire physical and digital ecosystem that was required to create a seamless experience for need satisfaction is what we created. And then coffee is, I'm assuming everybody has money to buy a coffee, but if it is a LED screen, a smart TV is what I want to buy, and I don't have enough balance, all that I have to do, it's a seamless journey. You just click on the TV icon, then I add to cart, and then I check out, and I choose the bank option that is given there. And if I chose Wing Bank, it automatically triggers a loan and tells me that you only have $100 in your wallet, and if you and the TV is $200, here is a $100 loan. Can I proceed? And you just say yes, proceed, and it automatically approves, checks your credit eligibility, approves the loan, disperses that loan amount not to your wallet but to the merchant's wallet, and then you get the TV. The TV comes home through the delivery, and then you have to pay back, of course, or you don't have to pay back. It auto debits from your account, and it just goes from there. So that's a seamless integration of the ecosystem that happened. We also supported that with physical retail shops. It's called Wing Shop. So you also have a physical point where you can go and pick up things. But most of it that I talked about is digital. Now, that's for a consumer journey. Now, the ecosystem has not just consumers. Now, I ordered coffee from a coffee shop. Now, that is a small and medium enterprise, which basically is the driver of the economy in Cambodia. Now, that person has specific working capital requirements. Now, if I'm looking for $100 working capital in the morning to buy milk and coffee powder, I can actually go to another icon inside the app, which is called Wing Market. Which then provides me a white labeled working capital loan to buy a certain product. A lot of times it was sponsored by a particular brand. For example, if I'm talking about beer, then there is Heineken, which comes and says, I'm ready to give, if I'm a Heineken retailer, I get onboarded onto this Wing Market platform. And then I click on the loan, and it comes to me to buy Heineken products. So I cannot buy Guinness. I can only buy Heineken with that money. So then that, which basically gives better line of sight to the corporate, to the SMEs, to their SME partners that they have, so they can decide whether to share the risk or not share the risk. But eventually the SME is the one who's getting benefited because there is some credit guarantee that is being given by somebody there. So then the same SME who was supplying to a consumer is now buying from a corporate. Now, so the corporate is now onboarded. Now the corporate has corporate banking requirements. They need a web interface because the apps don't work there. So you have to create a web interface for their purchase department to work with the bank. So then it gets connected there. So that then we also created an offshoot of the same ecosystem for agriculture because it has specific requirements. So it was called Wing Agri. So Wing Agri has the farmers, the agri SMEs, agri cooperatives, agri corporates, all of them onboarded onto that. So that those workflows work the same way, but specifically customized for the agri sector. So that is how we try to seamlessly create an ecosystem and then set it up for adoption in the market.
So in essence, you actually brought the ecosystem into the platform.
That's correct. We basically went backward and forward to integrate. Yeah. Not necessarily banking. So that's a bank sort of does non-banking stuff.
Yeah. It's actually quite interesting because I think when we look at even our local market, fintechs like Capital, which is basically doing the same, where they started off as a payment gateway and they literally integrated the ecosystem, which makes it easy for people to do transactions. So you're paying your electricity bills, you're ordering extra. And I think I read some time back, I think FNB South Africa which basically is focused on being a digital bank, where they've actually brought the ecosystem into their platform, where customers now can basically sit in the comfort of wherever they are and do anything they want without necessarily having to step out to engage in physical persons or infrastructure. But then it's also good to know that it's a journey. You guys still have the physical infrastructure, where in case people need some kind of additional support, or as Africans, we still need some assurance or guarantee that yes, we are dealing with someone. So, but of course, some time it's going to be phased out, which I think the banks also now focusing on rolling out less branches. David, correct me if I'm wrong. And encouraging people to do more digital transactions. And yes, banks are not needed. What is needed is banking. So as long as the banking is there, you have a digital bank, a platform, you can do everything. You don't need a physical bank. So, thank you, Manu. And Othman, so from all the discussions that we've had, we know that most infrastructure or investment requires a lot of financing, and there's a lot of policy fragmentation. I know you spoke about regulatory harmonization, but if you look across, there's a lot of like different policies that are broken up all over. But as someone working with Smart Africa, driving this whole digital agenda for Africa, what do you think governments and regional organizations and the private sector should do in creating an enabling environment for sustainable digital development?
Yeah, thank you very much, Thomas, for the question. I think that is really important that we get each stakeholder to really play their role. So, for example, in the case of government, policy certainty is really, really important. Predictable licensing regime. You have situations where change of government will lead to changes in license and conditions, and in some cases the license are even taken. So, which means that government really need to provide policy certainty. You also look at tax treatment, right? Spectrum rules, and also avoid uncertainty, because if you have investment coming into the continent and there's no certainty in terms of the rules, then it gets difficult for the private sector, and for that matter, investors to really come into the continent. The next thing is the regional organizations. And here, I think that, like I mentioned, we are now at a stage where at the national level, a lot of things are working well. Citizens of a country, if they want to have access to their ID, if they want to have access to their ID's information, mobile money, and others, is working perfectly. But then if you want to scale beyond one country, this is where there's always a challenge. And that is where I mentioned the issue of the regulatory harmonization. And the first layer that we can use, I think, is the RECs. That is the regional economic communities. And in recent times, we have been working with them to see how best we can harmonize the various laws and regulations at the regional level. So you take ECOWAS, the ECOWAS region, so which means that services that are actually working in Ghana, if you go to Cote d'Ivoire or Nigeria, you don't have to restart the whole process. So which means that if the policies are harmonized, then whatever vetting or procedure that is applied in Ghana, and if you obtain the license, when you go to a neighboring country in Cote d'Ivoire or Nigeria or Togo, even if there are going to be any checks, that checks should be very minimal, so that unless you can continue. If we don't have that harmonization, scaling becomes very difficult. But then let me add that the efforts that we have made is yielding some results. So let me give one example. In the case of regional roaming, if you go to EAC, they are trying to harmonize their laws. and make sure that when they move from one country to another within the EAC region, they are able to roam successfully. And this has also been extended to other services like ID. You know that Smart Africa is currently working on the SADC platform to ensure that, for example, Ghana, Rwanda, and Benin start as pilot to ensure that they are able to access their data seamlessly. So it's something that we can do and it's really working. Nonetheless, it's really important to flag the challenges. Thomas, sometimes you can always meet at the regional economic level, agree on the rules, how to harmonize it and how to go together. But then when that agreement is made at the regional level and even at the continental level, many of these laws and regulations need to really go with the national regulations, because if you look at international law, if you agree on something at the international level and at the national level, the laws do not agree, then you will have challenges enforcing it. So sometimes these laws and rules will have to go through a parliamentary ratification, and governments that are not committed to the regional integration, and for that matter, continental integration, you realize that they will not want to sign it. And sometimes some of them, they see, perhaps they will think that they are giving away some sovereign rights to the benefit of everybody. So then it gets difficult to really sign it. And even if you have some parliamentary ratification, sometimes it gets to the president and the president is not willing to sign it. So these are some of the challenges that we face when it comes to the regional harmonization. Nonetheless, we still have to work through the regional economic communities. And in the case of telecom, for example, currently what we are doing is also to add the regional regulatory associations. So in the case of West Africa, you have WATRA, right? In the case of EAC region, you have EACO. In the case of Central Africa region, you have ATTAC. In the case of Southern Africa region, you have CRASA. So what we are doing is to work with the regional economic communities, work with these regulatory associations. Certainly there are other sectors like in the banking sector and others that eventually we will extend it to. But what we are doing is to start with these low-hanging fruits, then we can always have the harmonization. The last part is the private sector. I think the private sector job is capital and delivery. But of course, there's the need to always de-risk whatever investment that they put in. Because if, for example, within Africa, there's that policy uncertainty, there's the need for us to have development finance and coming in first. So the likes of Badia Africa Development Bank can always come into the risk the first part of the investment, and then you can then have private capital coming on board. So what it means is that at least if we are able to really work together, of course, fragmentation persists, partly because of rules blur, because we are really not clear. Sometimes private sector are even expected to take some uncertainty that they are not expected to take. So if we are able to clear our rules where government is for policy certainty and predictability, regional organizations for aggregation and making sure that the rules are harmonized at the regional level, and organizations like Smart Africa can also come in to do the harmonization at the continental level. So what it means is that the pilots that we are having for SADC, digital ID interoperability, all these things will really work without issues. So these are the points that I really want to submit for this particular question. Thank you.
Thank you, Osman. So development partners can come into you. So remove the risk elements, and then the private partner comes in with the capital. But also, I think one of the key things that you mentioned is the level of uncertainty, because we need to create certainty for this whole digital infrastructure and digital transformation to take hold and to move forward. Because when you have change of governments that we keep experience across Africa, there's always a policy change which creates a lot of uncertainty and affects the investment that the private partner is going to bring in, and even the development partners as well. They can't even come in to create that certainty when all these policy changes are happening. But then it's also good to know that look, the regional economic blocks need to play their part in getting this moving. I know recently in Africa, after decades, there's been a way forward for the single currency for Africa. We're hoping that will actually this time around it will come into play, because I know this discussions, as I can remember as far back as the 90s, ECOWAS was discussing this, but all the countries were not in agreement, and at some point, we're just going to be the English-speaking countries, for the French guys at the same bar. But just like the midway forward, so that brings some kind of harmonization in there when it comes to the financial sector for Africa. So thank you very much, Osman, for that. And I'll come back to Manu now. So again, Osman spoke about the private sector, bringing in, the capital injection. But then we know from all the discussion that it requires significant capital injection for digital infrastructure. But Manu, where do you see the greatest opportunity for public-private partnerships over the next 5 to 10 years?
Yeah, thanks, Thomas, for that question. And to me, I spent close to 8-9 years in Africa, different countries, and then when I came to Southeast Asia and specifically to Cambodia, I realized that there are a lot of best practices that Africa can take away from Cambodia. And to me, Cambodia is a very good case study to the rest of the world as to how a developing nation can bring the public and private sector together to drive financial inclusion. Now, the National Bank of, as I was briefly mentioning before, the whole project of Wing was started as a pilot project because there was absolutely no regulation at that point in time with the National Bank of Cambodia to regulate a mobile financial services company. But instead of saying no to it, they said, let's try this as a pilot project and let's see. And we will evolve and we will formulate, and then we'll evolve as the business evolves. And over a period of time, we also realized that the National Bank of Cambodia is the biggest disruptor to the private sector and the biggest enabler to the private sector, both. Now, a few years ago, it was, I'm not very sure if all of you are familiar with Cambodia and its history, but about 50 years ago, the government had abolished the National Bank was bombed, and it was destroyed, and currency was abolished. So Cambodia didn't have a currency 50 years ago, and people were using rice as barter and different things. They were using the barter system. This is not 500 years ago, it's just 50 years ago. Okay, and from there, Cambodia leapfrogged, and a few years ago, it was the only national bank in the world which had a blockchain-backed interoperable platform. And so as I mentioned, Wing was a mobile financial services company which had a business model which monetized transactions. Now, the National Bank launched an interoperable platform and onboarded all the financial institutions onto it and made transactions free. Now, from monetizing transactions, all the payment companies were forced to look for a business model where you have to monetize something else because your transactions are no longer monetized. So that's one of the reasons why Wing became a bank, from where monetizing transactions, we started monetizing money. But the Bakong platform, the platform is called Bakong. It is owned by the National Bank of Cambodia, and it onboarded all the financial institutions and made interoperability seamless, easy, and free for all Cambodian people, merchants, consumers, corporates, everybody alike, as the first step. And thereafter, they integrated with the neighboring countries, especially in the ASEAN region, and made interoperability seamless. So I can, as a Cambodian, I can travel as a Cambodian bank account holder, I can travel to any of the neighboring countries, most of the neighboring countries right now, and pay with my own Cambodian bank account, and then make payment in my local currency in a foreign country, and the merchant in the foreign country will get that amount in their local currency. So interoperability of payments domestically, now interoperability of payments internationally. Now, there are a lot of countries, that the big ones as well, in the China and the India, have also got onboarded onto this interoperable platform. Now, the interoperability, so the public sector is laying the rails for interoperability of payments first. Now, interoperability of payments, in my opinion, will eventually lead to interoperability of commerce. So anybody sitting in Cambodia or in China can buy from each other and pay in their local currencies, and of course the goods then move offline, but the payments are real time, instant, and in your own local currency. So that's one of the ways the National Bank of Cambodia has actually led the way. Um, Even though for a short term it disrupted the existing business models of payment companies, it also challenged the payment companies to reinvent themselves. To me, that has been an excellent example of how public and private sector come together to take a country's economy forward. And I've always been vocal about the fact that open banking first requires open minds. And I realized when I was working in Ghana, it was extremely difficult. David is sitting here. It was extremely difficult. It was rather extremely difficult for us to go and integrate with banks, because the banks look at the fintech as a competitor, and the fintech looks at the bank as an opportunity to cannibalize. So it's quite difficult. So I guess open minds come first, then open banking follows, and the public sector can actually lay the rails for it.
Right. Thank you, Manu. And actually, yeah, since you left Ghana, yeah, the banks and the mobile networks are now working closely together. And I mean, even now, you can just on your banking platform, you can link your mobile money wallet and then easily move funds across if you make payments from your through your mobile from your bank account. So even now, I can take my mobile money, just transfer it from there into my bank account or somebody's bank account, etc. So there's been a lot more collaboration. But yeah, the key word here when you're speaking was interoperability, which is, I think, for now, in terms of where we're going, it's something that is very important for us to be able to move forward. And Osman mentioned the data exchange bits, the pilot that's being run by Ghana, Benin, and Rwanda, where citizens of these countries or in the future citizens of the continent can go to each other's country where ID data verification is seamless. For example, you can go to leave Ghana with your national ID card, go to maybe Kenya, and probably you have to open a bank account where they can easily verify your information, and then you proceed with opening a bank account or whatever transaction you need to do without necessarily having to go through other processes of getting other verification documents, etc., which becomes very cumbersome. But essentially, interoperability is you making things easy and more seamless. Like the National Bank of Cambodia making greater platform and bringing all the banks onto the platform and making payments or transfers across the banks zero rated. And I hope David is here. I'm looking at David. I hope that the banks here can do that where I can transfer. I mean, I can transfer money, but at a fee. But where it's zero rated, and I can easily just do that because. And again, this is a challenge to David in the traditional banking space because a lot of people are moving on to borrow money, but then how do the banks, aside working with them, how do you also get people to also in the traditional banking sector so do more transactions and not lose or equal to more? I mean, that's just on the side.
Yeah,
Still,
that'll take us another 30 minutes.
yeah. So, David, you as Africa, we generated a lot of data, a lot of customer data, transactional data, etc. And do you think governments should prioritize data centers and cloud infrastructure, or should government focus on really expanding connectivity first across the country and the continent?
Okay, when you say connectivity, I'm sure you mean the underlying infrastructure in terms of internet, etc.
This is
I
very
find this topic very interesting, right? If I was looking at the internet coverage, different internet service providers, I don't know if we could mention some. So you have an
yeah, sure.
international, sure. So you have Starlink that has 100% coverage across Ghana today, obviously from our satellite infrastructure. No local telco has 100% coverage on infrastructure. So then it tells you that, for the focus of Ghanaians and the government being, if we don't step up soon enough, the competition coming from foreign bodies is going to be more fierce, right? I think the best telco we have is doing 95%, so it's not quite 100, obviously. Um, I think the focus around providing coverage or providing data centers, you need a coverage to a large extent for the data centers to run, right? So,
Yeah,
and essentially, you don't want to get to a point. I think you asked me how we are integrating AI. You don't want to get to a point where, imagine, the government of Ghana is integrated to a foreign LLM, right? And you have sensitive or critical information going out. I'm sure they'll frown upon that. So the question is, do we have any research labs in Ghana? Moving, challenging the frontier of AI. None comes to mind. Maybe I might have to do some research in that space. But I think coverage is largely solved. 95% is not bad. I think that's MTN, right? Data centers, we currently have a number of tier 3 data centers in Ghana. I think we have only one tier 4. So there's a bit more work to be done in that space. And I'll say more around just pushing the frontier around AI research as well. So just pushing the frontier around AI research. So I'll say they are both important. Coverage has been largely solved for. So then the focus should be on data centers and AI research, especially looking locally. Because if you look at some of these cloud providers, like I said, we have tier 3 data centers in Ghana. You take an AWS, they already have presence in South Africa. They have a local zone in Nigeria, right? Microsoft, Oracle doing the same. So the competition is going to be fierce if we don't commit the resources and investments necessary to scale up in that area. So especially for data centers, right, and AI research.
okay. Thank you. So government should focus more on data centers. And as you rightly said, we have some networks in the country that have get approaching 100% coverage, and there's still others who are sort of helping to bridge whatever gaps there are. I can chip in this part in terms of Ascend Digital, where we rolled out the rural telephony project that helps bridge the gap in terms of connectivity from the urban areas into the deep rural areas, and which gives the traditional telcos the opportunity to now extend their coverage using this rural telephony infrastructure into those the deep and remotest parts of the country. That means that everybody is connected. But yeah, it's true. We need to build more data centers. I'm happy to say that there's quite a number of them popping up in the country, data centers, and the conversation again in Ghana is getting businesses and government to host data locally, because if you do a survey, you realize that a lot of people still host their data in Europe, in America, and other parts of the world. Whereas now, as David said, we have tier 4 and tier 3 data centers in the country that can host the data. And of course, taking advantage of the cloud. And it's also important to note that you mentioned the AWS and co, who have realized the need to bring the hosting of the data closer to their target markets. So you hear it, I guess that's why they have to have it. South Africa, Nigeria, where now the data doesn't necessarily have to go to Europe, but it's closer to us. But they're still pouring on anyway. So let's try. I mean, we need to do a lot more research to build our own. So thank you for that, David. And Osman, back to you. So again, I mean, since as South Africa, you do a lot with African countries. And if you could make one recommendation to African policymakers and business leaders to strengthen the continent's digital backbone over the next decade, what would that recommendation be?
Thank you very much, Thomas. Before I answer that question, I don't know whether I can touch on the issue of the data centers because it's something which is very dear to us.
Yeah.
Now, from where we sit, I know there has been efforts for many countries to have their own data centers. And certainly in Africa, we have to work towards ensuring that our data is secured within the continent. But within the continent, we may have to look at it from regional data centers. And the reason is this: some countries, really, if you look at the supporting infrastructure, particularly when it comes to power, data centers require a lot of power and also the expertise. Some of our countries are not able to meet the minimum requirements for establishing and maintaining tier 3 and tier 4 data centers. So, which means that even if they put in the required investment, and they are going to host their national data and also services within the country is hosted in these data centers, they may not be running at optimum, and for that matter, the investments may not pay off, right? So then from where we sit from Smart Africa, we are looking at, of course, the need to also adopt the concept of having regional data centers. So which means that if you take Ghana, where you have tier 3, tier 4 data centers, government need to come up with the required environment in terms of data protection, in terms of the various laws that will provide guarantees to other countries that will be hosting their data in Ghana. And this is where the concept of data embassy comes in. So data embassy, so the two countries will sign an agreement to now say that if I host my country in my data in your country, the rules of diplomacy applies there. So nobody can have access to it. It is protected and the rest. So which means that if I'm a country in Africa and I realize that putting so much investment into data centers or the underlying infrastructure and supporting infrastructure like power is not there, and there's proper regulation rules, and the concept of data embassy is working, what I will do is to enter into a negotiation with the government of Ghana. The rules are clear. Nobody can have access to my data. My data is protected, and I can actually host my data there. So yes, some countries have the right environment to establish data centers, but of course, these data centers should be configured in a way such that they can serve the various regions. Now, to the question that you asked me about one policy recommendation, I think that is something I would term as mutual recognition. What does that mean? So David is in Ghana. David is operating in Ghana, having a bank or mobile money platform, and David is doing well in Ghana. David wants to now expand to Nigeria. David wants to now expand to Togo, Senegal, and even outside West Africa. Now, the vetting process and the approval processes that David has gone through in Ghana should be mutually recognized by the neighboring countries. So what it means is that David need not to solve the same problem 44 times or 54 times, right? So even if it is within that region, if David goes to Nigeria and David is supposed to operate, even if the regulators in Nigeria is to take David through some processes, it should be minimal, right? Because Ghana has already done the vetting. But what do we see? If David goes to Togo or David goes to Senegal or any other country, it means that David will have to restart all over. The good news is that something is happening within the continent. So if you take Ghana and Rwanda, so if you are fintech in Ghana or in Rwanda and you are given the license in Ghana and you come to Rwanda, it's recognized. So what it means is that we really have to go beyond what Ghana and Rwanda is doing and make sure that we multiply it across, even not across the continent, but the various regions. So mutual recognition is something that will be one of the top recommendations I will make to policy holders. Thank you very much.
Thank you. Mutual recognition, yeah, which is actually quite interesting. I think in part, Osman, earlier you touched briefly on the data exchange pilot. And I think that's one of the things that data exchange is you're looking to address, this whole idea of mutual recognition. And from the example that I gave, where you can move from one country to the other, where you have to go through the whole process again, you can use your same ID or whatever details to get the service I need in the next country. And I mean, it's at the end of the day, we're looking at one Africa, driving one Africa, and all these barriers that we need to overcome. So actually help Africa move forward. And as I mentioned earlier, not just be a follower in the whole digital revolution, but also be a leader in the digital revolution. Because I mean, here, as I said, we believe that Africa is going to be a leader in the digital revolution in the few years to come. And, where you have Silicon Valley in the US, that whole concept is actually going to change, and a lot of the ideas are going to come out of Africa. So, thank you for that. To our audience out there, please, if you have any questions, any comments, put it in the comment section because we're coming to that very soon. So, gentlemen, before we wrap up, I'd like each of you to complete the sentence for me. I will start with Manu and then go to David and Osman. So the question starts, the comment statement starts. Africa's digital future will be defined by. So, Manu, complete that sentence.
Africa is already is getting to be very well connected. A lot of countries are now connected with each other on interoperability. So Africa's future will be determined by how this connectivity is converted into opportunities through innovation and how well you execute it without excluding anybody. So if I were to form a sentence, then Africa's future is determined by how you convert this connectivity into opportunities.
Thank you, Manu. David, Africa's digital future will be defined by.
I'll say the resilience of the foundational infrastructure we engineer, and the key word for me is engineer, right? As a people, we tend, unfortunately, sometimes to be very theoretical. So I think we need the courage to begin building hands-on, scalable systems that solve real-world problems. For the next billion users. I want us to get to a point where you can bank with a bank in Africa for over a year and not get a single transaction failure.
Right. Thank you. So, Osman, over to you. Africa's digital future will be defined by.
How well we harmonize policy across borders, not by how much any single country builds on its own. Thomas,
Yep.
policy harmonization, those days we were just working in our respective countries, trying to ensure that the services are working. You have mobile money, your ID, you can go to the bank. Now in Ghana, they say you shouldn't even photocopy, they can access the platform. But we are at a stage where, David, we have one Africa. Thomas, we have one Africa. Emmanuel, we have one Africa. So if we really want to scale, it means that we really have to harmonize the policy. So once again, Africa's digital future will be defined by how well we harmonize policy across borders, not how much any single country builds on its own. Thank you very much.
Thank you. Thank you, Osman. So Manu says that Africa's digital future will be defined by how productivity is converted to opportunities. David says it will be defined by resilience of foundational infrastructure we engineer. And Osman says how well we harmonize policy across borders. Gentlemen, thank you very much. It's been a pleasure having this interaction with you today. At this point, I'd like to turn to our audience. So if you have any questions, if those can be queued up. So, Mr. Furrow, you have a question? Okay, so I have a question here from Kwabena Amfor, who says, what are the biggest infrastructure gaps currently limiting Africa's digital transformation? Let's say, Osman, we'll start with you, and then you, David, and Mike. The biggest infrastructure gaps currently limiting Africa's digital transformation.
So, Thomas, like I mentioned, if you look at the investment that has already taken place, it's massive. So if you look at the last mile, David was talking about satellite coverage. And if you look at the mobile coverage, currently we are looking at more than 95%, right, of our citizens covered. Yeah. So I think that there's a need for us to optimize what we already have and then put in the additional investment. So currently what we are battling with is what we call the usage gap. And the usage gap is the fact that you have the services, but the citizens are not using the services. And largely it boils down to about 4 or 5 factors. And one of them has to do with the cost of the services, right? So of course we have the issue of people able to afford smart devices and the rest. Cybersecurity, basic digital literacy, and the rest driving the usage gap. But I will want to stay on the cost of the services. If you look at traditionally how Africa infrastructure is laid, much of the traffic is routed outside the continent. Now, when you route the traffic outside the continent and back, so traffic that is originated in Africa, destined for Africa, in many cases is routed outside Africa. And because if you look at the way the infrastructure is laid within the continent, sometimes regulatory harmonization is a big factor. And sometimes you will have the infrastructure, but the policies within the respective countries do not allow the operators or the owners of the infrastructure to route the traffic within the continent. So traditionally, regulators will ensure that at the national level, the right thing is done. But it's now time for us to now put our eyes on the regional and for that matter, the continental level. So I will say that currently, unless we have enough infrastructure, we have to look at how we harmonize our rules, the regulations to ensure that we have optimal utilization of the infrastructure that we have. And certainly we can put in additional terrestrial alternative rules that I mentioned earlier on. We can put in additional internet exchange points. We can also put in GRX, particularly when it comes to the issue of roaming. So IPX, GRS. Again, if you look at roaming, the clearing and settlement largely is done outside the continent. All these add up to the cost of the service. And that is why many of our citizens are still not able to use the service because the cost of the service is out of their reach. Thank you very much.
All right. Thank you. Manu, what do you have to say in terms of the biggest infrastructure gaps?
Yeah, I left Africa in 2018, so I'm not very sure I'm up to date. So please correct me if I'm factually wrong. But while I was there, one thing that I've noticed is the high cost of operations, which basically translates into high cost of services that we were talking about. And one of the biggest problems that I faced in multiple countries, I mean, I've worked across 18 of African countries. I've noticed one common problem in most of them is a reliable power grid, electricity. So if you don't have, and the cost of operations goes up, and then you have to have generators, you need to have diesel, and so on and so forth. And the fuel cost, everything then gets passed on to the customer, and then the cost of operations and services goes up. So the what I was talking about, like a free interoperable platform, etc., then becomes a difficult business proposition to be passed on to the private sector. So I'm not too sure if the scenario has changed in the past 8-9 years. If it hasn't, it used to be a reliable power grid. That was a problem.
Thank you, David.
Yeah, no, interestingly, largely it still is, that's the number one gap within Africa, because fortunately in countries like Ghana, I was checking the ECG's uptime in terms of power availability throughout the year in different parts of Ghana. Accra, surprisingly, is way up there above 95%, but other parts are hovering even below 60% in different parts of the country, right? And obviously, in different countries, it's much worse. I'm not going to mention any country to start a war on the thing, but essentially, if you don't solve the power grid or the access to electricity issue, it ripples, like what Manu said. It ripples to purchasing. Obviously, you need petrol, fuel, and diesel to run generators. Um, Transporting that fuel. If you look at the typical data centers balance or cost sheet, fuel is about what, 30 to 40% of that. And like what Manu said, it translates that cost is passed to the customer. And sometimes you are solving problems, like I said, the foundational layer being electricity. You're probably solving an AI problem, you're trying to set up an AI research lab or something, and you are solving problems at a layer where the dependent layers haven't been solved for, right? And that in itself has that ripple effect where meeting the actual digital transformation targets becomes, I won't say impossible, but much of a challenge. So that's something we should be looking to solve for.
Okay. All right. Thank you very much. Can we have the next question, please? Right. The next question is from Abuna Pomar, and she's asking, what will it take to attract the level of investment needed to build Africa's digital infrastructure over the next decade? So, David, since you finished the last one, you start with this.
I think Osman, in a way, has answered it. So we see the investment coming in, right? But then imagine you are an investor, coming into Africa. You know the challenges there. Again, power being one of them. So if we don't solve the fundamental or foundational issues, we might have that pushback. But largely, I think the hope in Africa's development is largely optimistic, right? We all know that the opportunities are in Africa. We see the investments coming in. So I think largely it's been solved, but there's more we can do from that perspective to solve it further, right? Starting with the foundations.
Thanks. Manu?
I guess it's glass half full, glass half empty kind of opportunities, depending upon which angle you're looking at it from. If you're looking at it from an investment angle, then lack of infrastructure is an opportunity for somebody who can provide it.
Thanks, and Osman?
Yes, again, just to build on what has been said, policy certainty is very key. The opportunities in Africa are there, and of course, capital really is looking for a place where they can actually it can actually be used. But if you have that policy uncertainty, a change in government will really is throwing your investment into the dustbin, then there's always going to be a challenge. So which means that you can always have the development finance coming in to absorb part of the risk, and private capital can always come on board, right? So if there's political certainty, I think that the required investment will really get into the continent. Nonetheless, the other stakeholders like Africa Development Bank, Badia, and the rest, even some national banks can really come on board to really absorb the initial risk, and then you can have private capital coming on board. So policy certainty is really key. Thank you.
All right, thank you very much, Osman. I think we're almost at the end of today's session. We are approaching the 1 hour our time limit that we give ourselves. So at this point, just to recap, we've had a very engaging discussion on building Africa's digital backbone infrastructure for the next decade. So our panelists, Manu Rajan, David Kriegrin, and Osman Issa spoke about the fundamental support infrastructure that's required. We're looking at the likes of having the electricity, which will lead to availability and uptime of the infrastructure. We spoke about regulatory harmonization, harmonizing the rules across the various countries, interoperable infrastructure where the infrastructure can sort of interact and communicate with each other, and also picking up best practices and implementing it across localized and implemented it. So that please, I remember I had a former boss who said, corporate pride, do not reinvent the wheel. So if it's something that's working perfectly in Nigeria, we can look at it maybe in Rwanda, see the lessons from Nigeria, how we can work with that, localize and implement that without having to start everything from scratch, because we're looking at fast tracking Africa's digital revolution and we need to work with speed. So at this point, Manu, David, Osman, it's been a pleasure. I'll say thank you very much for coming on board this morning or evening from Manu's end, afternoon from Osman's end. Thank you for joining us from your respective countries and contributing to this discussion. To our audience, I want to say thank you for joining us. This panel discussion is available on our YouTube and LinkedIn page. You can go there anytime and then just watch or listen to it. Feel free to reach out to us. I think if anybody has any further questions for the panelists, you can easily reach out to us and then we'll link you up. So thank you everybody for joining us today. Thank you panelists for making the time, and I wish you all a pleasant day. Thank you very much.
Thank you, everybody.
Thank you.
Appreciate it.
Bye-bye.
Bye.
Bye.
Africa is on the fast road to